are recording. Yes, that was basically point 6, which was okay. So I want us to go to the next step, that is ARPs. The next step is basically what you call ARPs altogether. In an audit cycle, after materiality, we go to what you call analytical review procedures. So I want us to proceed to what you call analytical, and we call it review, and you say procedures, analytical review procedures. We'll respond with the yes if you're there. I hope you can see that. Analytical review procedures, analytical review procedures. Analytical review procedures. So whenever we talk about ARP, when you ask ARP, one of the elements of ARP is competition, ratio computation, cross-sectional analysis, we have reasonableness check, and what you call comparing financial and non-financial information. Those are elements of ARP. So whenever we talk about ARP, that is Sabrina and John, whenever we talk about ARP, we call it computation, ARP, basically computation of what we call of significant ratios. So examples of ARP is ratio analysis. So then you have trend analysis. So we call it the trend analysis. We have the reasonableness check. And then ARP, and we say comparing financial and what's called in the non-financial and the non-financial comparing what's called the financial and non-financial information. So comparing what's called the financial and the non-financial information. So if you ask examples of what we call examples of ARP, you can talk about ratio analysis, trend cross-sectional analysis, reasonableness check, and comparing what's called financial and the non-financial information. But then I want to talk about ARP at the planning stage. So what is the essence of ARP at the planning stage? Why do we need an ARP? And you say at the planning stage. What is the use of ARP at the planning stage? What is the essence of ARP at the planning stage? Why do we need ARP at the planning stage? John and Sabrina, why do you need ARP at the planning stage? One is to assess what you call the ratio analysis, the reasonableness check, to assess what you call, to assess. One is to basically assess what you call the risk. The essence of ARP at the planning stage is basically to assess the risk. One is to assess the risk. Identify a potential problematic area. Identify what's called potential. The word is potential. And you call it problematic areas. So identify potential problematic areas. That is the second use of ARP. Determine amount of time that will be required in an audit. Determine what we call amount of time. Amount of what we call of time. We say required in an audit. Just a minute. I attend to something. Just 1 minute. So back to where we were. So we said that the essence of an ARP is basically to assess for the risk. The second is basically to identify what we call problematic areas. Then we say determine what's called the amount of time that is basically required in the audit. Then you can say determine what you call staffing requirements. We can talk about determine what you call the staffing requirement. and we call it requirement. To determine what's called the staffing requirement, determine what's called the staffing requirement, in terms of engagement, and skill, engagement level. In terms of engagement, we have two things: engagement levels and skills. In terms of engagement level and what you basically call the skills, we respond with a yes. And lastly, ARP will help us to determine what's called nature, extent, and timing for further assessment procedures. Nature, we have it timing, nature, extent, and what's called timing, nature, extent, timing of further risk assessment procedures, of further, we call it further risk, and you say assessment procedures. So that is the essence of ARP, but you say at the planning stage. Give Mwalimu a yes if you're there. ARP at the planning stage. Respond with a yes. So then we have the last on the stages of audit. We have developing what we call overall audit plan and strategy. Developing what we call the overall audit plan, and what we call the strategy. Developing what's called overall audit plan and what you basically call the strategy. Developing what's called overall audit plan and what you call the strategy. So I want to talk about two things now. What is an audit plan and what is audit strategy? Audit strategy. I think this question, John asked this question on a particular moment. Audit plan. Together, John. I remember in one of our class you asked this question. So when you look at these two things, audit plan and audit strategy. So whenever I talk about the strategy, it sets out the scope. This one sets out what they call the scope. When you talk about strategy is much smaller than a plan. Strategy is much smaller. It sets out the scope, timing. It sets out the scope, timing, and direction of audit, and direction of what we call of audit. That is a strategy. A strategy sets out the scope of an audit, timing, and the direction of an audit. So when you look at strategy, are we together? It helps in guide development. This guides what we call development of what they call of an audit plan. It is a strategy that basically guides what's called the development of an audit plan. It is the strategy that basically guides the development of an audit plan. So when it comes to plan, is more detailed than an audit strategy. So the plan basically includes, this is more detailed. When you look at it, more detailed than strategy. So more detailed than strategy. It is more detailed than strategy. So it includes the nature. We say it includes what we call nature. We have timing. It includes the nature, timing, and extent of audit procedures, and what we call extent of what we call audit procedures to be performed. To be basically performed. And the audit procedures basically to be performed. Respond to the yes if we're together. And the audit procedures to be performed. So then when you're looking at matters to consider when you're developing a strategy, I want us to talk about matters. Matters to do what? To consider. We say when developing what I call a strategy. So when you're coming up with an audit strategy, what are some of the matters that basically needs to be considered when we're basically coming up with an audit strategy? What are matters that needs to be considered? Sabrina and JK, what are these matters that we basically need to consider? when we are coming up with an audit strategy. When you're coming up with an audit strategy. So one of the matters is significant factors. You need to look at significant because you're defining scope significant factors. We have what's called significant factors. We have what you basically call significant factors. We have what you call significant factors. Then you also have characteristics of engagement. Characteristics, we call it characteristics. Characteristics of what we call of engagement. Characteristics, and we call it of engagement. We look at significant factor and characteristic of engagement. Are we together? Specific factors, are we together? Of audit engagement together. Specific factors of audit engagement together. But you also need to look at what we call the reporting objectives. Reporting objectives is a factor. Reporting objectives, we call it reporting objectives as a second factor. We call it the reporting objectives. We need to look at the reporting and you say manage reporting objectives. We need to look at the reporting. What is the objective of reporting? Then we need also to check on the recent changes. When you talk about the recent changes as a factor, recent changes, when you touch on the recent changes, when you look at the recent changes, we can talk about on the recent changes, new accounting standards that is in place. We can also talk about changes in IT system. We can also talk about changes in management or ownership altogether. So we can also look at on reporting objectives, we can look at the deadline. So this will touch on the deadline of reporting. And we can also look at regulations behind reporting. But we can also talk about determining materiality, what we call determination of materiality. So determination of what we call materiality. So these are factors that need to be considered when you're developing an audit strategy. Give me a yes if you're together. We respond with a yes. If you're there, we give it a yes. So then I want to talk about issues to do with audit strategies and approaches. So what do you call audit strategies, and what we call approaches. So audit strategies and approaches. We touch on audit strategies and approaches. So when you talk about approaches to audit, these are strategies to what we call approaches. Audit strategies to what we call approaches. So these are basically methodology. We call them methodology that audit adopt to enable achieve the primary objective. Methodology to do what? To achieve. The word is to achieve what we call a primary. To achieve what we call a primary objective. So we call it methodology to basically achieve what we call a primary objective. So methodology that is basically employed to achieve what we call the primary objectives. Are we together? Which is to what is the primary objective? Is forming what we call an audit opinion. Forming what we call audit opinion. Which audit strategies do you know, John and Sabrina? Examples of audit strategy. So we have a risk-based approach. We have system-based approach. We have analytical review procedures. We have balance sheet of audit approach. We have what calls a substantive approach together. So I want us to start with the risk-based audit approach. Risk-based audit approach. So when you talk about the risk-based audit approach, I'll talk about three, the rest you read in the notes. I'll discuss three. Risk-based, system, and ARP, then the rest you can get in the notes. Is that okay, Sabrina? I'll discuss 3. Then the rest you get from the notes. So what is the risk-based approach? So these are audit procedure that is basically sensitive to what you call, the word is sensitive. This is basically sensitive to what you call to the risk factor. So this is basically sensitive to what you call to the risk factor. So this is an approach of an audit that is basically, we say, sensitive to the risk factor. Sensitive to the risk factor is an approach of an audit that we basically say that is sensitive. The one is that is sensitive to the risk factor of an audit. Risk factor, and we say of an audit. Risk factor of an audit. So this is basically sensitive to the risk factor. And we're saying that the risk factor of an audit. Basically sensitive to the risk factor of an audit. Sensitive to the risk factor of an audit. So with this, the auditor will basically apply judgment. We say that the auditor will essentially applies judgment. His judgment to determine the level of risk, to basically determine what's called the level of risk that applies to different areas of the client system. So the auditor basically uses judgment to basically identify risks that apply to every area of the client system altogether. So the approach basically ensure, if you look at the risk base, this approach basically ensure that it's most of the effort is basically connected to areas that the risk level is high. So effort is given to areas where risk level is high. Effort given to areas, the word is area, where the risk level, we say that the risk level, you say, is high. So in this approach, effort is basically given to areas where the risk level is basically, we say, is high, where the risk level is basically high. Give it a yes if you're together. Effort, and you don't waste your time on unnecessary areas altogether. You don't basically waste your time on areas that are of no need. So we look at the audit risk. We look at the audit risk. We look at the audit risk. We look at the audit risk or the risk model. So if you look at the risk model, if you're looking at the risk model, so from the risk model, we have what's called audit risk, and we have what's called the business. So we have audit risk. We have what you basically call the audit risk. We have basically what's called the audit risk. We have what you basically call the audit risk. We have what you basically call the audit risk. And then we have what's called the business risk altogether. So audit risk we've discussed in depth. Are we together? So when you talk about this one we have discussed a lot. So we have the IR, CR, and DR. Have we discussed those at length? Have we discussed these things at length? JK and Sabrina. When you talk about inherent risk, control risk, and detection risk, we have discussed those at length. But then we have what's called the business risk. So when you look at the business risk, we have what's called the financial. We have what's called the financial risk. Financial risk. We have financial risk. We have what we call operational risk. Financial risk. We have operational risk. Financial risk. We have operational risk. And then we have what's called compliance risk. What we call the compliance risk. We have what you basically call the compliance risk. So I want to discuss this business risk. Are we together? I want us to discuss audit risk we discussed in detail. So I want us to discuss what's called the business business risk. On approaches, I want us to discuss the business risk. We've said that the risk-based approach, much effort is always directed to areas that are extremely risky. We don't waste our time on those areas that we do not consider risk. We do not waste our time on those areas that we do not consider risky. So on business risk, we basically need to understand associated, are we together, with functioning, are we together? When we say business risk, these are risks we need to understand faced by business as a result of operation, are we together? So as a result of business operating, this risk basically is going to face a business together. For example, the risk that client may fail to achieve one or two of the objective altogether. Are we together? The risk that the client may fail to achieve one or more objective, which could affect the ability as a going concern. So then we discuss this component of this business. We have what's called the financial risk. We don't need to write everything. Financial risk. Allow me to explain the financial risk. So whenever we are talking about financial risk, this one is basically associated with financing function of an entity. So financing function, financing, we call it function. We call it financing function of an entity. So this is basically associated with what's called financing function of an entity. It is associated, and the word is associated with financing function of an entity. Are we together? So examples of entity, financing function of an entity, cash flow, and uncertainty with financing decision. So examples of financing risk out here. So examples of financing. When you give loan, we have what we call default loan, default risk, the risk of not being able to pay back the loan. We also have foreign currency fluctuation risk, foreign currency fluctuation risk. We have what's called the foreign currency fluctuation risk, interest rate fluctuation risk, interest rate fluctuation risk. So we have the interest rate fluctuation risk. We have the interest rate fluctuation risk, interest rate fluctuation risk. We have what's called credit risks, etc. Together, that's financial risk. Give my name a yes if together. That's a financial risk together. So then we talk about operational risk. When it's all operational. So whenever we're touching on operational risk, we're saying operational. So this one is associated, we say associated with what we call with revenue. We call it revenue generating. So this is basically associated with the revenue generating activities of an enterprise, activities of what we call of an enterprise. Revenue generating activities of an enterprise. So that is basically associated with revenue generating activities of an enterprise. So when you talk about operation risk associated with revenue, so this is the risk of loss of major customer. So you can say loss of what you call of major customer, loss of what you call a major customer, and then losing a major supplier, we call it losing what we call a major supplier. So losing what's called a major supplier, losing what's called a major supplier. We can also talk about risk of obsolescence of key products of the company. Obsolescence of what we call key products of what we call of a company. Obsolescence of what we call a key products of a company, what we call obsolescence. Then competition risk, because we have issues to do with competition competition risk. So we have what you basically call the competition risk. Then you can have what's called the compliance risk, what you basically call the compliance risk. We call it the compliance risk. We call it the compliance risk. We call it the compliance. So whenever you're touching on compliance, this has to do with what's called regulations. Are we together? Regulation. So risk that the company will fail to comply with laws and regulations. Company, to say failing to do what? To comply with what's called with laws and what to call and regulations. Compliance with laws and regulations. So the company will basically failing to comply. It is saying to comply with what's called the laws and regulation. So the company will basically fail to comply, and you're saying to comply with what's called the laws and regulation. Failing to do what? To comply with what's called the laws and regulation. That a company will basically fail to comply with what's called laws and regulation. And if a company basically fails to comply with laws and regulation, what happens? A company will be fines. Will have fines, damages. A company is going to pay damages, fines, damages. We have fines, damages. Order to wind up. It can also be issued with the order to do what? To wind up. Order to basically wind up. A company can be issued with the order to basically wind up. An order to do what? To wind up together. So I want to talk about briefly. Are we together? I want to talk about briefly what you call steps in risk-based audit approach. Steps in risk-based approach. Steps in what's called in risk-based approach. Step that is being carried in risk-based approach. Sabrina Tukopamonte. JK, are we together? Step that is basically being carried in the risk-based. Number one, background knowledge about the client. You need to have background knowledge, to say knowledge, and to say about the client. You need to have what's called background knowledge about the client. That is the first thing that needs to happen. So determine what you call the level of overall risk that is acceptable, level of overall risk, level of what you call overall risk that you say that is acceptable. That is acceptable. The level, and you say of overall risk that you basically say is acceptable. Then you do what? Carry out inherent risk assessment. Inherent risk assessment, and you do what? And you quantify. Carry out what you call inherent risk assessment, and you do what? And you quantify. Number two, control risk assessment, CR risk assessment, and you do what? And you quantify. Control risk assessment, and you do what? And you quantify. Then you can also carry out solve the risk model, meaning that get the detection risk, solve the risk model, solve what's called risk model, solve what's called the risk model. So on the risk model, this is basically just to determine DR. So DR will be audit risk over CR times IR. So that's how we get the detection risk. John, is there an issue on that? Audit and assurance risk, AAR. So how do I get detection risk? We understand that audit and assurance risk is DR times CR times IR. So if I'm looking for the detection risk, I basically need to have the audit risk, that is audit and assurance risk, over the control risk times the CR. I'll be able to get the detection risk. Are we together? We respond to this. So then you say, in that you will be able to calculate what's called detection risk. Are we together? Detection risk, are we together? Detection risk and acceptable. detection risk, and what's called acceptable levels. So you determine the detection risk and acceptable level. Are we together? Acceptable level, you get that? To see acceptable level of audit risk. Acceptable level of what you call of audit risk. Once you achieve those three, detection, CR, are we together? Once you have them, you'll be able to achieve what you call the level of acceptable level together. 7, on that, the next is what you call substantive. We call it the substantive testing. So whenever you're talking about substantive testing, the next step is what you call substantive, and we call it testing. So whenever we talk about substantive testing, this is the detailed testing. Are we together? This is what you basically call detailed testing. Are we together? So whenever we talk about substantive testing, we know that this is the detailed testing, areas that are really risky. So this substantive testing, which is detailed testing, concentrated where risk level is high. Concentrated, we say where risk level we say is high. So this should basically be concentrated where the risk levels are basically very high. Respond with the yes, where the risk level we say is basically high. Are we together? Then you have what's called audit conclusion. We have audit conclusion. We call audit conclusion. We have the audit conclusion. Then we carry out final review of an audit. Final review of what we call of an audit. Once you have the final review of an audit, we'll draft and sign the audit report. We call it draft. And you say and sign the audit report. Draft and sign what we call the audit report. We call it draft and sign the audit report. Those are steps that are being carried in what we call in analytical review procedures, in what we call risk-based approach. Together, team, give Malimo a yes if we are there. If we are there, we respond with a yes. So I want to talk about advantages of a risk-based approach. Advantages of a risk-based approach. Advantages of what we call risk-based approach. Advantages of what we call a risk-based approach. Approach that is basically concentrated. Approach that is concentrated on risk areas. Number one is to avoid what you call over or under auditing. Helps avoid over or what you call under auditing. So just talk about 3 to 5. Over, so it reduces what you call the audit cost. Reduces audit cost. Why? Because they just concentrated on areas of significance. You don't move into other areas in terms of time and areas that are low risk altogether. So it reduces audit cost altogether. It also reduces what you call auditors' exposure to legal litigation. Reduces what you call auditors' exposure to what you call to legal litigation. Exposure to what's called the legal litigation. So it reduces what we call the auditor's exposure to what we call legal litigation. Reduces what we call auditor's exposure to what we call the legal litigation. We can also talk about what we call allow delegation of audit work to more junior members of audit team. Are we together? It also allows delegation of audit work. Are we together? Are we together? To junior staff. But again, this adds value to the audit. Adds value to what we call to the client. This is basically adds value to the client. So these are advantages of a risk-based approach. Together, risk-based approach. Give Mwalimu a yes if we are together. Give Mwalimu a yes if we're together. Advantages of a risk-based approach. So what are the limitations? If you concentrate, limitations of what we call the risk-based audit. Limitations on the other hand. So what are limitations of basically concentrating on areas that are risky? It's difficult to put quantity on the value of risk. Sometimes you can say this level of risk is low. So difficult to put value on the quantity. Difficult to put value. We say on what's called on the quantity of risk. So it's extremely difficult to put value on the quantity of risk. Are we together? Let me say it may lead to mechanical approach to audit. May lead to what we call to mechanical approach to audit. It may lead to a mechanical approach to the audit. It may definitely lead to a mechanical approach to an audit. It may definitely lead to a mechanical approach to the audit. It may lead to more mechanical. Then leads to a lot of time is wasted in risk assessment because it's more a lot of time is wasted on what we call the risk assessment. So a lot of time definitely is being wasted on the risk assessment. A lot of time is basically, but again, also if you look at the risk, done with the perception of fraud, this is done with what we call with the perception. The word is perception of what we call fraud. So this is basically done with a mind of fraud, with the perception of fraud in mind, with what's called a perception of fraud in mind, which changes the objective. If you do it, what is the objective? Is to give opinion. So this changes with that perception of fraud, it changes. So that changes what we call the objective of what we call an audit. So if you do it with perception of fraud, that will automatically change what we call the objective of an audit. Give it a yes if you're there. That will definitely change what's called objective of an audit. We respond to this. So then I want to talk about system, what we call the system-based audit approach. System-based audit approach. We just discussed this briefly. System-based audit approach. We talk about what's called the system-based audit approach. So what is a system-based audit approach? When you say system-based audit approach, when you basically say system-based audit approach, what do you mean by system-based audit approach? So most of the OP is based on what you call the client ICS, which places reliant on the client internal. So this places what you call hope on what you call on the client, and you say internal control system. So if you told the system-based approach in a question, so if you're told the system-based audit approach, so a system, this audit procedure or approach, audit methodology or approach, basically place more reliance on what? On the client system. Are we together? On the client system. Are we together? So two things happen, if the system is strong, and you have scenarios where the system is weak, are you going to rely on the system when it's strong, Sabrina? Are you going to rely? So if the system is strong, you're definitely going to rely on that system, and you're going to perform a limited detailed testing or what we call substantive testing. However, if the systems are weak in this approach, you will not place reliance. Are we together? You will not place reliance on a system. However, you are going to, you're going to develop what's called vouching. You're going to trace vouching. You're going to go with vouching, where you're tracing the transaction from the origin, are we together? Which is basically characteristics. Vouching is basically characterized by extensive, we call it extensive substantive testing. Substantive testing. So that is the system-based approach. Are we together on the system-based approach? If we are together on the system-based approach, we respond with a yes. We respond with a yes. We respond with a yes. So we've touched on a bit of ARPs altogether. So if you ask ARP, are we together? We had talked about ARPs, where we say examples of ARP is ratio analysis. We talked about reasonableness check. We talked about comparisons of financial and non-financial information, ratio analysis, and etc. We also talked about the essence of what we call ARP at the planning stage. At the planning stage, are we together? Are we together? We talked about ARP at the planning stage. That's ARP we talked about at the planning stage. So that I will not talk about. That one you can look at ARP during an audit and ARP at the conclusion. However, I want to talk about the last one that I'm talking about is substantive testing audit approach. We'll talk about substantive testing audit approach. So this is the last one that we are discussing on approaches. Together, John, substantive testing. John, are we together? That is the last one that we are discussing. Substantive testing. Then I will talk about something briefly. So what is substantive testing? It takes a more of a vouching step, where you trace, defined as all tests of details of transaction, all test of what we call AUDIT. We call it all the test of the transactions, all test of what we call transactions, all test of what we call transaction, and what we call an accounts balance, and accounts balances, all the tests of transactions and accounts balances, to prove what we call to prove, number one, validity, we have accuracy, to test validity, test of all accounts balances and transaction accuracy, completeness, and what you call and reliability of information, So JK and Sabrina, whenever we are talking about substantive approach or detailed testing, so you're testing transaction and accounts balances to prove what you call validity, accuracy, completeness, and reliability of information in the accounting record. Information in what you call in the accounting record. In the accounting records. Together, in the accounting records. Give me in the accounting records. Are we together? So you need to understand that it is adopted in all approaches adopted by an auditor. All approaches that is adopted by an auditor. So the balance sheet, you are going to read on the balance sheet. You can also read something on joint audit, and that you will get to read on that altogether. Are we together? That you will get to read on that. Together, that you will get to read. Joint and what you call, you read joint and what you call balance sheet audit approach. Is that okay? Yes, those three we discussed. So you read the balance sheet audit approach and the joint audit. Promise me that. So I want to go to preparation of working papers. I want us to go to the preparation of working papers. Are we there? On the preparation of working papers. Are we there? We respond to this. Preparation of what we call working papers. We move to what we call preparation of what we call the working papers. So that is audit documentation and working papers. That is basically on audit documentation and working papers. So I call it preparation of working papers, preparation of what we call of working papers. So I call it the preparation of working papers, preparation of working papers. This is basically ISA 230. So when you talk about preparation of working papers, that is basically ISA 230. Preparation of working papers or audit documentation of the working papers, that is International Standards of Audit 230. International Standards of Audit 230. So we start with what's called audit documentation. Audit, we call it audit documentation. We start with what's called audit documentation. So when you say this is basically ISA 230, International Standards of Audit 230. International Standards of Audit, we call it 230. So we'll begin by defining audit documentation. So when you say documentation, this is all records of audit procedures performed, records of audit procedures performed, relevant audit evidence obtained, and the conclusion reached by an auditor in the working papers. That is audit documentation. If at all audit documentation, it refers to records of all audit procedures that are performed, relevant audit evidence that is obtained, and conclusion reached that is basically presented in the working papers. We call it audit documentation. Give me a yes if we are together. Give me a yes if you're together. So say records of all audit procedures performed, we call it records of what we call of all audit procedures, we call it performed, records of all audit procedures that are performed, evidence, we say obtained, evidence obtained. The next is what's called evidence obtained, and the conclusion reached, and the conclusion, we say the conclusion reached, we say in the working papers, and the conclusion that is basically reached in the working papers, and the conclusion that we say is reached in the working papers. That is audit documentation. Give Mwalimu a yes. So then I define what's called working papers. Working papers. Working papers. We now talk about working papers. So what is then now the working papers? So when you talk about working papers, these are all materials that are prepared, all materials prepared. We call it all materials. All materials, we say prepared, collected, materials that are prepared, collected, and retained by auditor, and retained by the auditor, to say in connection, and retained by the auditor, and you're saying in connection, retained by an auditor. Just a minute, I get to somebody. Just a Sorry for that small interruption. So we're basically saying that when it comes to working papers, These are all materials that are basically prepared, collected, and retained by an auditor in connection with the audit, in connection with what's called with the audit. So John and Sabrina, this brings a very crucial statement. Who is the owner of working papers? Is it the client? Who owns ownership of the working papers? Is it the client or the auditor? Who owns ownership of the working papers? Who is the owner of working papers? It is the auditor. Are we together? So examples of working papers. Examples of what we call working papers. Examples of now the working paper. So those circularization, when you circularize and you get information from the bank, that's the working paper which you can. So one is audit program. Audit, we have what's called audit program. Is the first working paper, we call it audit program. We have analysis, what we call analysis. Analysis, we have analysis, issue correspondence, issue correspondence. We have what's called issue correspondence. We have the checklist, circularization, documents. These are working papers, circularization documents. We have a letter of internal weakness. Those letters of internal weakness. Letters of what we call internal weakness. Letters of what we call internal weakness. Letters of what we call internal weakness. Letters of internal weakness. We can also talk about correspondence, not even correspondence, exchange of information, correspondence, then issue memorandums. Issue memorandum. So those are examples of working papers. Sabrina, we at home. I want to explain those working papers a little bit. Sabrina took us out. So then when Maluma talks about, when you talk about what's called the audit program, when you talk about audit program, we understand that detailed plans are together. That basically sets out the nature, timing, and the extent of what you call audit procedures altogether. So when you talk about checklists, we can also have one of which checklist. If I talk about checklist, key issues identified during engagement, they are basically placed in checklist. Then you can also have what's called issue memorandum. We can also talk about letter of weakness, that is the management letter, which we can also check one, we can have what they call analysis, analysis. This is maybe digital information that has been assessed by the auditor. So these are examples of what we call audit working papers. Give me yes if you're there. Those are examples of audit working papers. So then we talk about qualities of a good working papers. Very first quality of what we call of a good, we call it good working papers. So qualities of what we call good working papers. Qualities of a good working papers. So then they should be comprehensive as possible. They should be understandable. We call it comprehensive as possible. Should be able to understand them as possible. Comprehensive as possible. They should be comprehensive as possible. Contain what's called facts. Should contain. The word is contain what we call facts. It should basically contain what we call facts. Should contain facts. Then properly indexed and organized. We can say properly. We call it indexed and organized. So they should be properly indexed and organized. They should basically be properly indexed and organized. They should be basically properly indexed and organized. They should be properly indexed and organized. Then they say should be properly bound. Properly bound, we can say properly properly bound. So then we can talk about they should be kept for sufficient period. Kept for sufficient period. Kept for what we call for sufficient period. They should be kept for sufficient period. We can talk about any symbol must be clearly explained. Any symbol must be clearly explained. Any symbol must definitely be clearly explained. Give Malinos, any symbol must be clearly explained. Must be clearly explained. Any symbol must basically be clearly explained. Any symbol must be clearly explained. So then we go to the importance of documentation. Importance of documentation. Importance of what we call of documentation. Importance of what we call documentation. So one of the first importance of documentation, we say it can be used for training. It can be used for training. Can be used and say for training. It can be used for training as one of the importance. This documentation can be used for training, provide evidence that audit was planned and carried out in accordance with audit. Audit was planned and we say carried out, we say as per ISAS. So that the audit was basically planned and you say carried out as per the ISAS. Audit was basically planned and you say carried out as per ISAS. Audit was planned and carried out as per ISAS. So they also facilitate quality control review. Facilitate what we call quality control review. They facilitate quality control review. They facilitate what we call quality control review, facilitate control of current year's work, facilitate control of what we call of current year's work. Current year's work. Facilitate what's called control of the current year's work. Facilitate what's called control of the current year's work. Provide direction and supervision to audit staff. Direction and supervision to the audit staff. So they provide direction and supervision to audit staff. They basically provide what's called direction and supervision to the audit staff. Are we together? Are we together? We responded yes. So then we talk about organizing what's called working purpose. Are we together? Organizing working purpose. So we go to organizing what's called the working purpose. So we call it organizing what's called the working purpose. So working purpose are basically divided into two. Are we together? Working purpose are basically classified into two. Are we together? Permanent audit files and current audit files. Permanent, we have permanent audit file and what's called the current audit file. So we have the permanent audit file and what's called the current audit file. Together, Sabrina. So as we take a break, we come back and start with permanent audit file. Permanent audit file. Permanent audit file. That is where we come and start with permanent audit file. I want us to come back and start with permanent audit file. We'll start with what's called permanent audit file. Permanent audit file. together. Are we together? We respond with a yes, permanent audit file. That is where I want us to come back and start with. Sorry for taking that much time. So then we get back to permanent files. When you say that working papers are normally put in what's called audit file. So organization of working papers are normally put in an audit file. And basically you have two audit files, what's called the permanent audit file and what's called the current audit file. We have what's called the permanent audit file and what we basically call the permanent audit file. Are we together? So I want us to start with the permanent. Are we there with the permanent audit file? If you're there, we respond with a yes. I want us to start with the permanent audit file. So whenever we talk about a permanent audit file, JK and Sabrina, whenever we talk about permanent audit file, we are basically saying that we put the working papers that basically contain information which is recurring in nature, and that is relevance may go beyond the current year. So relevance of that working paper can go beyond the current year. So putting working papers, this is putting working, and we're calling it working papers. Putting what we call working papers, working papers, we say that putting working papers that contain information which is recurring, that we say contain information that we say that is recurring. That basically contain what's called information that we say is recurring, information that we say is recurring, that contain what's called information. We're saying that information that is basically recurring, that basically contain information. And we're saying that information that is recurring, that contain what's called information that is recurring in nature, and the relevance we go, and the relevance, and we say the relevance goes, and we say beyond the current year. And the relevance we say goes beyond the current year. And the relevance we say goes beyond the current year. And the relevance basically goes beyond the current year. And we say that the relevance basically goes beyond the current year. We respond to this. The relevance basically goes beyond the current year. Are we together? So the relevance can last even for 5 years. So what is the content of permanent file? Permanent file. Content of what we call of the permanent file. So what is the content of the permanent file? What is the content of the permanent file? That is the question. What is the content of what we call a permanent file? So on organizing working papers are basically contained in the file. And we have two files, permanent files, and what we call the current file. So say current file basically contain working papers that are recurring in nature, and the relevance goes beyond the current years. Copies of clients' statutory documents, we call it copies of what we call of the client's statutory, we call it statutory documents, copies of client's statutory documents, So we have AOA, MOA, Article of Association, Memorandum of Association, and Certificate of Incorporation, certificate of what we call of incorporation. Certificate of what we call incorporation. Those are permanent. They are put in a permanent file. Certificate of incorporation, registers of shareholders, register of shareholders. So these are put in a permanent file. So these are documents that you need forever. Certificate of incorporation, you need it forever unless you're doing away with the company. We can also talk about relevant legislation. Relevant. We call it legislation. Relevant legislation. Relevant legislation. And other statutory material. And we say other. And other statutory material. And what we call other statutory materials. And other statutory material. We call it other statutory materials, such as company. Other statutory materials such as company. We call it companies. NSC regulation. NSC regulations. Regulations. NSC regulations such as companies. NSC regulation. National stock markets regulations. And you can also talk about it called description of entity, business, and operation. This description of what they call of entities, operation, and description of entities, operation, entities, business, and what we call operation. So description of entities, business, and operation, physical address and postal address of the company. Physical address, physical and postal address of a company. So these are basically kept in a permanent file. List of lawyers, bankers, list of lawyers. We have bankers, stockbrokers, etc. Stockbrokers, brokers, etc. So these are basically kept in a permanent file. They're kept in a permanent file. John, are we together? That is kept in a permanent file. So then we move to what we call current audit file. Audit file. Current audit file. Current audit file. So you can just introduce that. Putting working papers that are of short-term importance to auditor. Working papers. So you're putting working papers that we say are of what we call short-term. We call it importance to an auditor. So you're putting working papers that are basically of short-term importance to the auditor. You're basically putting what's called the working papers that are essentially of short-term importance to an auditor. So in our next class, we start with the content. That is tomorrow. Unless there's a question, we'll start with there tomorrow. We can start from there tomorrow in our next class. Is there anybody with a question? Letters of internal weakness. That is a management letter, simply management letter. Management letter of internal weakness. So you're looking at the internal control, John. Internal weakness, you're looking at internal letters of internal weakness. You describe the weakness, but you can as well also provide recommendation of how this weakness can be affected. That is more or less management letter. That is letter of internal weakness. Together. Thank you so much. Unless there's another question. Sabrina, do you have another question? Sabrina, is there any question? We are moving on so well. I want us to do the ICS. When you get to the ICS, then we start with topic 5. When you get to topic 5, we'll be on it. But I'm happy. I'm happy with the work that we are doing. So we can close there. Sabrina, do you have a question? Do you have a question, Sabrina? Do you have a question? If there's none, then you can wrap it up. God bless you, and God bless our class. God bless you, and God bless our class.